Here to help us trade them all is Ava Otto. She's Chief Investment Strategist at ER Shares. Good to see you, Ava. Let's start with McDonald's. Buy or sell for you?
I would say hold for this one. I do like the fact that over the last 16 years, even though the revenues have been flat, the management has done a great job squeezing margin. Their profits and margins almost doubled in the last 16 years. And also I like the fact that in the last 2 years, in an inflationary environment, even though their prices, their costs were coming higher, their prices went higher faster. So they were able to increase their prices much faster than their cost increases. And so their margins widened. I also like the fact that their dividend yield is almost 2%. They've been able to steadily increase it over the last 2 years. So a very good dividend yield here. But I have it as a hold and not a buy, because their valuation is almost 2 to 3 times their peers, and the stock has never been higher. It's currently at an all-time high, which obviously it's a safe bet if you're heading into a recession environment, but I wouldn't buy it in this relative valuation.
Eva, let's move on to the next one, which is Medtronic. What do you think here?
So this one is a short-term buy. I like the fact that the relative valuation is 1/3 below their peers, and also they recently got an FDA approval for their insulin pump. So that can be a short-term catalyst, and investors can take advantage of this in the short term. However, we need to remember that over the long haul, this company has been an underperformer for more than a decade. The revenues have been flat in 7 years, and their margins have been steadily decreasing in the last 20 years. And so their fundamentals do not look that good. A short-term buy, monitor it very closely, and make sure you don't hold it for the long term.
So let me ask you, when you say, I want to bear down on what you mean by when you say short-term buy. Is there something that if I follow your advice, I buy it, is there a moment in time where you would say, okay, get out now because X has happened? What is that? You get my drift.
Yes, monitoring the news very closely. So they recently got this FDA approval, and so their news will carry over over the future months or so. But when that fades out and
Gotcha.
Investors are taking more, they notice more of their fundamentals, the actual fundamentals, which do not look that good, then it's probably a good time to start considering taking profits
Gotcha.
off the table.
And Ava, that brings us to First Solar. You're not a fan here.
I would say a sell. So that's definitely a sell for me, actually, because the relative valuation is 3 times their peers. And what's interesting to notice is that in an environment where oil prices and energy costs have been rising, and that has benefited the overall category, I don't understand how this company cannot make money when everyone else in their sector is making money. In fact, also, the revenue growth is negative 10% when the rest of the category is averaging 50%, and their EBITDA growth is negative 100% when the rest of the category is up 40%. And so their fundamentals do not look good. They cannot make money. And I would say it's a sell for this reason.